Good morning, everyone, and thank you for choosing financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial News, June 21, 2023. As your host, I'm delighted to present to you the noteworthy developments that have transpired in the bond market, catalyzed by an unexpected inflation shock in the United Kingdom. This sudden surge in consumer prices has fueled speculations of further interest rate hikes by central banks, consequently sending ripples across global markets. Now, let us plunge into the intricate details. The impact of rampant consumer price pressures in Britain has reverberated through European government bonds, including UK gilts, acting as a cautionary signal to central banks worldwide. In response, the benchmark government yields in the UK witnessed a rise of 5 basis points, while Germany experienced an ascent of 3 basis points. Similarly, in the United States, U.S. Treasury yields added 2 basis points, driven by market participants' anticipation of higher terminal rates. It is crucial to recognize that the implications of this inflation setback extend beyond the borders of the UK. Federal Reserve Chair Jerome Powell, who is scheduled to present his semi-annual report to Congress, may adopt a more hawkish tone in light of these developments. Furthermore, the Bank of England faces mounting pressure to consider a more substantial rate increase during their upcoming policy meeting, scheduled for this Thursday. Pooja Kumra, a senior European rates strategist at Toronto Dominion Bank, underscores the significance of the UK's inflationary pressures. She asserts, the BOE is still grappling with regaining control over the underlying pressures. A critical risk for the markets lies in whether Powell presents any conditions for the FOMC's resumption of their hiking cycle following the pause in June. Shifting our attention to the equity market, we observe that the S&P 500 has encountered consecutive declines, thus concluding its 4-week winning streak. Consequently, futures contracts on the index have experienced fluctuations in response to this downturn. Adding to the market sentiment, FedEx Corporation, a key economic bellwether, witnessed a decline in extended U.S. trading after its outlook fell short of analyst consensus estimates due to weakened demand. Experts from Goldman Sachs Group Incorporated, including Cormac Connors and David J. Costin, sound a note of caution regarding the Power's second quarter stock rally, emphasizing the presence of potential risks. Factors such as crowded bullish positioning, narrow breadth, elevated valuations, and optimistic soft landing bets collectively contribute to these concerns. Consequently, Goldman Sachs recommends hedging S&P 500 exposure. Their base case scenario envisions the S&P 500 climbing to 4,700 within the next 12 months. However, they acknowledge the possibility of a drop to 3,400 if the likelihood of a recession becomes more pronounced. And thus, we conclude our coverage of today's top international financial and market news. The inflation shock in the United Kingdom has reverberated through the bond market, fostering expectations of further interest rate hikes. Simultaneously, the S&P 500 has experienced consecutive declines, and experts have voiced cautionary notes regarding potential risks in the equity market. Stay tuned for more updates and developments in the captivating world of finance and markets. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. In an intriguing acquisition, Eli Lilly, the world's largest pharmaceutical company, has recently announced its plan to acquire DICE Therapeutics, a biopharmaceutical company based in San Francisco, specializing in drugs for autoimmune diseases. This substantial deal carries a valuation of $2.4 billion, with Eli Lilly offering $48 per share, representing a premium of 40% above Friday's closing price. Amidst the financial landscape, the UK economy finds itself ensnared in a growth doom loop, as per the warning issued by the Institute for Public Policy Research. Decades of underinvestment in infrastructure, research, and training have trapped the UK economy in a state of stagnation, discouraging further investments. The International Monetary Fund predicts a meager growth rate of 0.4% for the UK economy this year. On Thursday, India's Prime Minister Narendra Modi will be bestowed with a remarkable honor, a White House state dinner hosted by U.S. President Joe Biden. Distinguished business leaders, including Tim Cook from Apple, Sundar Pichai from Alphabet, Satya Nadella from Microsoft, and Raj Subramaniam from FedEx, will grace the occasion. This signifies the escalating attention given to India by corporate America amidst the shifting dynamics of U.S.-China business relations. Following a recent rally that propelled stocks to their highest levels in over a year, U.S. markets witnessed a reversal, closing in the red on Tuesday. The S&P 500 experienced a decline of 0.47%, the Dow Jones Industrial Average lost 0.72%, and the Nasdaq Composite slipped 0.16%. While there isn't a specific event causing concern, market sentiment might be influenced by the fear of missing out, which is gradually losing steam. A comprehensive analysis conducted by Goldman Sachs suggests that corporate profitability has likely hit its bottom. However, they anticipate only modest growth over the next 12 months due to slowing price hikes and higher interest rates. Nevertheless, Goldman Sachs has identified a selection of stocks that exhibit the potential to defy the odds and expand their margins. Despite the recent pullback, the S&P 500 has defied expectations, securing a year-to-date gain of 14.5%. Several analysts anticipate further growth of approximately 8% in the second half of the year. Let's take a moment to review some of the notable market movements. Stocks. The Stoxx Europe 600 saw a marginal decline of 0.1% as of 9:24 a.m. London time. S&P 500 futures, Nasdaq 100 futures, and Dow Jones Industrial Average futures exhibited minimal changes. The MSCI Asia Pacific Index experienced a decline of 0.7%. The MSCI Emerging Markets Index witnessed a drop of 0.9%. Currencies. The Bloomberg Dollar Spot Index remained relatively unchanged. The euro demonstrated a slight increase of 0.1%, reaching $1.0930. The Japanese yen, on the other hand, depreciated by 0.5%, amounting to 142.11 per dollar. The offshore yuan experienced a decline of 0.2%, settling at 7.1959 per dollar. Similarly, the British pound fell by 0.2% to $1.2734. Cryptocurrencies. Bitcoin observed a rise of 2.4%, reaching $28,855.94. Ether also experienced a positive shift, increasing by 1.4% and reaching $1,809.90. Bonds. The yield on 10-year Treasuries climbed by 3 basis points, reaching 3.75%. Germany's 10-year yield also advanced by 3 basis points, settling at 2.44%. Britain's 10-year yield exhibited a more significant increase of 6 basis points, amounting to 4.40%. Commodities. Brent crude, a key benchmark in the oil market, rose by 0.2% to $76.05 per barrel. Spot gold encountered a minor decline of 0.1%, resting at $1,934.48 per ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.